is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Alicia Castillo-Holly, the founder and general partner of Wealthing. Alicia, thank you for joining us.
Thank you so much for having me. A pleasure.
Great. So where are you calling from today?
I am calling from the Bay Area today.
Great. So, tell us more about your journey from being a scientist to being a venture capitalist, and tell us what inspired that transition.
Oh, that's a fantastic question. I was concerned that the results of the lab were going to stay in the lab, and the only people reading that were other researchers, and it didn't have the influence that I wanted my research to have. So that's how I moved from there to entrepreneurship. Then as an entrepreneur, I learned a lot. And as I got older with more experience, I said, we can replicate this. I can amplify my impact. And then I became an investor.
Great. Well, tell us more about the concept of wealthing. What does the name really mean? And how does it reframe traditional wealth building models?
That's a great question. So through my journey, I realized that people were very, very focused on the static view of money and wealth. And I thought there has to be an alternative to becoming rich. And becoming wealthy or being wealthy is a feeling, it's a behavior. It's a choice as well. So you don't have to have a lot of money to be wealthy. It's a flow, it's very dynamic. And the concept of wealthing is that more money comes in or more resources come in than goes out. So you have an extra room for doing other things, experimenting, making mistakes, and it doesn't really affect you. And that's how I created the term wealthing.
So you've got a lot of history here with managing multiple VC funds across different continents. What are the lessons you learned from launching and running those funds?
I think the biggest lesson for me is that you have to respect money. A lot of people sort of forget about that. They think, oh, you have money to invest. That means that you have money to lose. Well, if I'm going to lose money, might as well just go and enjoy losing it. Let's go to the beach. Let's go and have a glass of wine. And I do want to make money out of my investments. And that is the biggest, one of our success defining aspects is we respect money. We want to make money with money. We just don't want to destroy other people or other wealthy mechanisms. So we want to make money. When you make money, you cannot create new wealth without distributing. So you create new jobs, you pay taxes. So it's a very holistic view, but money has to come first. You have to be able to make money out of your investments. Otherwise, you can't do it again.
Right. So you're an experienced entrepreneur and you've done a lot of early stage investing. What's the role of mindset in those two areas?
I would get the mindset is it's a combination of humility and assertiveness. So you need to believe that you're going to be an outlier. I'm an incurable optimist. But people say hopeless optimist. No, I'm not hopeless. I do have hope. What are you talking about? But I'm incurable. I keep saying, hey, you can do this. Is the magic of creating something. So you have to balance that with the humility to accept that you don't know it all. And that humility comes from my years of researchers. So people forget, especially in today's world, the whole purpose of research is to prove that you're wrong. Not that you're right, that you're wrong. That's how we advance. So having that combination of, I believe that I can do this despite everything against me, and that's the optimism, but also have the humility to recognize maybe there's a better way that I haven't seen. So that's just that balance.
Well, so how do you evaluate purpose-driven ventures for both impact and return?
Well, first, return comes first. That's what I say. So a lot of people move into impact, but wait a second. I need to make money, and I need to make enough money to justify my time and my contacts and my input. And the founders need to respect that. Otherwise, I always say, if all you want is money, I'm not a good fit. I don't invest and pray. I roll up my sleeve. Let's work on this together. We bring a ton of things, not just capital. And then we sort of have a system of 5 layers and say, well, how do you make money? How do you create jobs? How do you benefit society? And there's a lot of wasted resources that you solve just by being in the market. So we look at that, and that's how we sort of start filtering that. But money has to come first. We need to pay our investors, we need to pay ourselves, and we need to pay appropriately.
So you work with a lot of angel groups and syndication groups and so forth. What's your experience with them, both here in the U.S. and abroad?
Well, more than working with them, we share a lot of deals. More than working with them, we don't syndicate deals. We have what it's, in my never humble opinion, the best investment membership based club. And we do have a great deal flow. We have very good professional grade evaluation, but then we let anybody decide if they want to invest or not. So that's one filter. And the other one is we don't invest and pray. We really roll up our sleeves. So a lot of people believe that you are successful because you pick the winners. And I always say, I don't pick winners, I make winners. So it's a combination, it's a synergy between what we can do, what they have, and that's where the magic happens. It's a lot of fun too.
So what's your strategy for educating emerging investors in Latin America and underserved markets?
I think the biggest challenge for let's divide these. I'm going to talk a little bit about Silicon Valley because it's a very unique place. In my view, the second best or most likely place is Tel Aviv in Israel. So those are the two. And I've traveled to over 100 countries. I lived in many countries, and I've been investing. But I think the biggest realization is, first of all, you need to build your tribe. You I've invested alone. It's lonely, but it's also very, very impractical. So you have to find your tribe. You have to invest with other people, and that's the biggest challenge. And the other one is collaboration. No business school teaches about collaboration. We teach about competition. We never teach about collaboration. And one thing that we do is we call it innovation stacking. We have 3 or 4 companies that can collaborate in different things. And the best way to explain it is if you are selling a fantastic cappuccino, you need milk, you need the frother, you need coffee, you need the machine, you need the cup. So these are companies that can collaborate, and then they create new offers. But we have that approach of collaborating. Same thing with investing with other people. So we are very, very collaborative, and we look at that. We look at where are they inefficient, and we fill those gaps. And that's one of our secrets to success.
So can you teach collaboration to a group of people in more academic setting, or is it more of just a practical working through in a project such as an investment?
I think so. I learned by doing. And I think the best way to practice this is to join a group that can practice that, or to talk to other individuals, like the way we talk is, hey, look at this. And it's the mindset is about adding value. And that's one of the biggest challenge, because we live in a society where people need to see, what can I get from you, instead of saying, what can we build together? And then when you have that approach, you immediately filter out the people that are not going to participate on that. But those people are really, really valuable for society and for us as well.
So let's see what you think about the current trends in the marketplace. Let's start with financial education. What are you seeing going on there?
The issue with financial, I have a PhD in finance. So, and as a friend of mine said, what can you do with that? Teach. That's about the only thing, really, only research. But the main thing with financial education is that it's static. So, that's why I moved from just becoming rich to being wealthy. It's being, it's a feeling, and then you act differently because you are wealthy, and that's how you make decisions in a different way. Financial education is lacking a lot of things in terms of uncertainty. How do you manage uncertainty? So they go into risk, not uncertainty. And then the other thing is that we completely disassociate the impact that an individual has, the social capital, the intellectual capital, even the spiritual capital, the emotional capital. One of the things that we say is that anybody needs a champion, and founders, it's very lonely to be a founder against everything. And sometimes you just need a call and say, I just want to say how you're doing. No, don't show me my financials. Are you doing okay? So, those are the things that we need. We all need that. What happens in financial education is when you talk about wealth management, is all about how you beat the market, how you get ahead, and it's never about how you build together. And the essence of entrepreneurship is creating new wealth, creating new worlds. You cannot do that alone. That is where we need to add some more information.
So you travel so many countries every year. You must see a lot of startup ecosystems. What kind of trends are you seeing out there today in those?
If we can get political, a lot of
Mm.
disappointed with the US. I just came back from Berlin, and it makes me reflect a lot because Berlin was a divided city, completely divided. So you don't see that when you're there. And when you talk to people there, you're just like, oh, yes, you had two different, completely different ecosystems coexisting, but separated by walls and by costumes and things like that. So the principles that attract people to America, that attract me to this country because I wasn't born here, are the principles of honesty, hard work, authenticity, respect for others. We need to make sure that we keep those principles. We need to make sure that this is a country or this is a society that you can be valued as an individual, you can contribute, and you will be rewarded for your contribution regardless of your other views, regardless of your race, regardless of your political views. And we cannot lose sight of that because that is what makes this country an amazing country, and that's what attracts a lot of people here. What the challenges that we have now is that we are losing respect for the institutions, whether it's real or not. We need to respect the people making the decisions about regulating the economy, like FDA approval and those things, all these tariff things. We need to know that there is a due process where people are not going to have an advantage over another person. That is very unique to the US, and that is what we need to keep. When I go to other places, is the perception that if you're not part of certain tribe, you will never get there. That doesn't happen in the US. You can do whatever you want if you're honest, if you're authentic, if you have values. We need to keep that. Did I answer your question?
For startup ecosystems, yes, but another angle on that is capital access innovation. Are we saying the same thing there or something a little different?
So let me separate that. The part of innovation that makes the US very unique is the respect for intellectual property. Your intellectual property is your property. In any other place in the world that I have visited, and as I mentioned, I visited over 100 countries, there's no respect for intellectual property in the sense that if you see something, you copy something, you photocopy it, you don't think that somebody made the effort to create that piece that is their intellectual property. That's a respect for their intellectual property that is very sort of basic. Now with AI, everything is changing. That set the US apart because when your intellectual property is respected and you feel protected, then you can create more intellectual property. If you feel that anybody's going to use it without you benefiting from that, it creates a lot of distortion in the market. That is the part of innovation, okay? Now, the part of access to capital, and I do have a PhD in finance, understanding financial capital markets and innovation from academic research into the commercial world. So it's in life science, a very, very specific, the area where I work. There's more money available overseas. It's just the channel doesn't go through. And one of the main problems that VCs have all over the world is twofold. One is that they invest alone. We never invest alone. This is stupid. What a waste of resources. And the other one is that the people making the decisions don't have the capacity, don't have the experience to take those offers or their services or products into the market because they never done it. They work as number crunchers in banks. That makes Silicon Valley very unique because there's other places in America where that has happened. But that capacity to execute, to translate a concept into something that has value to the world, that's very unique to Silicon Valley. And people need to come here and learn that and invest with us.
Well, good, good. Well, you have a scientific background there as well as a venture investing background. How do you merge those two together? I mean, there's data, there's hypothesis, there's risk, but how do you measure those together and how does one support the other?
That's a great question, and I think it gives me a very unique angle because when I moved here, I noticed that one of the groups where I joined that was very, very robust angel group, they didn't have any strong biologists, which I have a strong biology background and genetics as well. So I used to go to the lab to see if something was true or not. If it's a So there's a difference between a dream and a goal. And I would go and say, how does this work? How does this move? And being an agronomist also adds some depth, because when you grow crops, you need to think ahead, maybe 1 year, 2 years, 3 years. So it's that view of biology as a system with the financial in the back, but it's having all these little groups combined that makes it very, very interesting. And being able to go to the lab and check. Did you check this? Did you do this? What about the physics? What about the chemistry? What about the biology? If I may, I just had a conversation with a guy who wrote the book about the blue economy. And I told him, biology is not engineering. You need to make a distinction. You can take a dog, break it in pieces to understand how it works, but you cannot put it together and say, go and work. It doesn't work that way. You cannot take 9 women in a month and make a baby. It doesn't work that way. So just having the biology background helps you understand systems in a very integrated, complex way and look 2 or 3 steps ahead.
That's great. So let's talk for a moment about the Wealthing VC Club. How is that like a venture fund, and how is it not like venture?
Thank you for that question. So, as I mentioned in my view, I think that's the best club. So what we do is we have a hybrid between a fund and a club. It's an investment club. We have a very robust deal flow. So we see between 50 and 100 deals per month. Some are actually thanks to you. And then we filter them. So we have a filtering process, and then we do a due diligence process, and we provide information to our members. So our members it's very cost efficient, but it's also very time efficient. Our members don't have to use their time gathering deals, evaluating deals, and performing due diligence, what is good, what is bad. So in that sense, that's very similar to a fund. What is different is that every member can make the decision to invest or not. And to be honest, I don't mind. I would like to invest in all the deals. I invest in all the deals. I actually did this for myself. And then I realized if I do this for myself, I might as well invite other people to come and invest with me. So in that sense, it's similar to an angel group, but it's different because we have all the professional work before and after the investment. We had 3 exits in June, and we're only 5 years old. We have 5 unicorns. We have 3 companies becoming unicorns. So we have a very, very unique model. And in terms of family offices and limited partners, there's nothing limited about becoming a member. You make your own decisions, but you have all the information to make your own decisions. We don't put any pressure. We don't have any minimum commitment per company or per year. These companies are going to get funded. They're good companies. So we're very, very unique in that sense. And we do take the 220 that any fund takes, but it's much more cost efficient because we take the 2% of the capital invested, not the capital committed.
So I assume you must be an accredited investor to join?
You have to be an accredited, that's correct. You have to be an accredited investor. We has changed actually. In August 2020, it changed, but we were so concerned with the COVID that we didn't realize. We have the laws in our website, Wealthing.club. So you have to be an accredited investor or you have a family office. We have White Glove services for family offices as well. And we help build portfolios as well.
Well, great. So in the last few minutes that we have here, what else should we cover today that we haven't?
Well, let's build this together. Happy to entertain introductions. If any company wants to apply, they have to go to our website. We have a very robust back office, funding.wealthing.club. Very collaborative. The best deals we share with other VCs or angel groups. We don't charge for sharing. We just share it. Everybody has to do their own due diligence. If they want our due diligence and our support, they have to join our club. The other thing that we realize is that we have our own secondaries. So we have a liquidity option for our members that we didn't plan it that way, but it turns out that any member can transact because we don't do SPVs. We have a multi-class LLC. And any member can come in and say, I would like to buy a participation on these companies. Would anybody like to sell? And so that's pretty cool.
That is cool. That's really neat. So
Yeah.
how best for listeners to get back in touch with you?
Well, the best thing is to come to Wealthing.club, and you can reach me on LinkedIn. I have a team. You can talk to Daniel Chaplin or Lisa Nelson. Lisa Nelson is in charge of family offices as well as myself, and Daniel Chaplin is in charge of the operations in Digital Flow. Danny is my son, so it's a lot of fun to work with another family member, and we're building up our family office alongside our club.
Well, that's great. Well, we'll include your contact details in the show notes. I want to thank you for joining us today and hope you get back for a follow-up soon.
Thank you so much. A pleasure to be here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.